Okay, guys, what's up? What's up, guys? Mike here, head trader at True Trading Group. Sorry about some of those technical difficulties, but we're back and we are ready to rock and roll. Get ready, guys, because we've got a really great lesson in store. And this is going to be how to So this is going to be about how to identify false breakouts. All right, how to identify false breakouts. This is going to be a lesson that's going to help save you guys a ton of money. It's a very specific bearish signal that will allow you to identify when a breakout is failing and when it's really designed to help get you out of the trade before the rest of the crowd realizes that the trade has failed. Okay? Can everybody hear me okay? Just want to do a quick audio check. Can you guys hear me? Doing a quick little audio check, guys, before we get started. Letting a couple other people, give some time to let some people log on. Perfect. All right, guys, great. All right, let's jump right in. Let's get right to it. So, guys, let's first start. Let's kind of recap the day a little bit first. Let's talk about the SPY. All right, let's talk about the SPY a little bit today. Today we had a monster jobs report, payroll report. Some of the best numbers that we've seen in a long time, and that caused a really big gap up in the SPY. I don't like when you get really big gaps in either direction because it makes kind of for a choppy day, and it kind of makes for a little bit less of opportunity. Today was a really weird day. We were up 335 points, 337 points, something like that on the Dow today. But the action was kind of there was, I feel like a lot of the moves today were taken away pre-market, and we had a lot of stocks that gapped up and just basically kind of chopped around and consolidated the gap ups. We didn't get a lot of stocks that really continued to push higher in a smooth breakout. Some people were trying to short some gap ups that really weren't working out to the downside because of how strong the overall market was. Today was kind of a situation where, rising seas lift all ships type of situation. So today's gap up was, it got a lot of people excited, but it really didn't provide for a lot of day trade, intraday opportunity. So that's just a quick little thing that I'll say about the SPY. We're sitting at 315. We're right below new all-time highs. We'll see if we can hit those new all-time highs next week. I think we do. All right, so now let's get into the bearish signal. This bearish signal is something that I teach to all of our TTG members, and I implemented it today in my trading, and it helped me beautifully. Allowed me to walk away from a trade in Sage with a profit instead of walking away with a loss because I was able to recognize the failed breakout and exit the position well before the stock pulled back in, well before my stop loss triggered, and it saved me a ton of money. Was the difference between me walking away with a profit from the trade and me walking away with a loss on the trade. So this is a really good lesson we're going to talk about. This lesson is covered in detail in the courses that are available on the website. This will be in the advanced courses. It covers this bearish signal that is guaranteed to help save you guys a ton of money. It's something that I look for on a daily basis, and I'm very conscious of when I'm going through my trades and I'm going through, looking for that breakout move to get continuation on that breakout or get that failed breakout. Something that a lot of traders struggle with. They really struggle with, well, how do you know that when the breakout is failing? I get people that ask me that question a lot. The first thing that I will say about when you're looking for a stock that's giving you a breakout, the first thing you want to see is a real strong increase in volume. The stronger the volume on the break, the greater chance you have of getting continuation. Be very conscious of a stock that breaks the high of the day with low volume. Be conscious of that. Stocks that break the high of the day on low volume could be showing you early signs that it's starting to run out of steam. The momentum is starting to slow. So when you get a stock that breaks through, let's say, a high of the day or breaks through any resistance level for that matter, you want to make sure that you get a real nice, strong increase in volume. The more that volume, the stronger that volume, the greater chance you have of the stock continuing higher. Now, let's go over to Sage and let's talk about this failed breakout. Okay, let's talk about this failed breakout. Here we are. This Sage was a really, really good setup this morning. Sage had the huge gap down yesterday. All right, we had a tiny gap up here today. But what really got my attention was this move right here through the highs of the initial morning high. This move is what got my attention. So as you guys can see here, as I draw this out, we had an initial morning high. Okay, we had an initial morning high. And when I draw up my Fibonacci levels, okay, you can see that initial morning high lined up right around the 38.2 Fibonacci level. Okay, right here. So when we broke through that high of the day on a real nice, strong increase in volume, I'm looking for this area to become support. We got a low volume pullback, very low volume. Look at how low that volume is compared to the volume on this break. Okay, this is a great setup. Then you had the trade line and VWAP coming up into play to add an area of resistance right down in here. Here's my, an area of support. So here's my area of support. Initial morning high gets broken to the upside with a strong increase in volume. We've got multiple support indicators that are converging on this same area, which is 38.2 Fib, initial morning high, trade line, and VWAP. And then you see lower volume on the pullback. Very low volume on the pullback. That's what I like to see. So I went ahead and I got long Sage right there, 64.25. I'll take you guys to my trade announcements on the day. And here you guys can see long Sage at 64.25, stop loss around 63.25, which is right around that previous high. Okay, that previous high you can see. So right below this level is where I'm setting my stop loss for this trade. So now this is where the false breakout comes into play. Now we're going to get into the signal that if you guys can recognize this signal quickly, you'll have about 5 to 10 minutes to get out of the position well before the rest of the market and everybody else realizes it's a failed breakout, because that's what we were able to do today. So guys, listen up, take notes. I will be taking questions at the end of this lesson. Once I break this down, we'll open up the chat. You guys can ask me a couple of questions about it. If there's anything that you don't understand, I'll answer those questions and help you guys out. But this part is very important. So as I'm long here, 64.25, you see we make our move, we break through the high of the day. At this point, I'm like, oh man, this is great. This is a great setup. We broke through the high of the day. I took some profits off the table. Let me go back to my trade announcements. You can see here I took some profit off at 65.70. That's about $1.50 a share on the position. I took my profits off there, and I'm like, okay, this is great. I still have the bulk of my position, and now I'm looking for follow-through. We didn't get follow-through. This is the key. When a stock breaks through the high of the day and then immediately pulls back in to retest the support level, that is the whole reason why you just got long the stock. That is a bearish signal and a sign that momentum has slowed. Let's look back at this Sage. Might sound a little confusing, but let's get into it a little bit deeper. When you guys are looking at this Sage, you see that we have a support level right here. All right, here's my support level. This support level is the entire reason why I got long the stock. If this support level was not here, I wouldn't be buying the stock. So this is the reason for my trade. So when you have a support level like this, that's the whole reason for you buying. This is the support level I'm buying in front of. Then the stock goes on to break the high of the day and then immediately pulls back in to retest that same support level. That's a bearish signal, because what you want to see is you want to see this support level move up. So when the stock breaks through the high of the day like this, you want to see the support level go from here up to here. That's what momentum is. Momentum is when demand for the stock moves higher as the price moves higher. That's momentum. So if you don't see that support level move higher with the price of the stock, that means the stock does not have momentum. And that is why you get a failed breakout. If this was a breakout with continuation, we should not have pulled all the way back down to that support level. What I would have liked to have seen, okay, would have been to see the stock hold right here. Hold right there. That would show me that support has stepped up, and then you can look for the stock to just take a little bit of a breather and then go. And that is what you want to see when you get a true breakout that gives you continuation. But immediately following the new high a day, we pulled all the way back down into that same support level. All right, let's go back again. Here's my support level. We broke the high of the day and pulled right back down to test that same support level. That is a bearish signal, and because of that action, I exited the rest of my position right there. Back to my trade announcements. Here you guys can see I sold out the remaining piece at 64.04. So this action told me this is a false breakout. We also got lower volume on this break of the high of the day than the previous high of day break. Usually on consecutive high a day breaks, a stock with momentum will give you an increase in volume each consecutive time. This was a decrease in volume, and we got the bearish signal where the stock pulled all the way back down to test that same support level. So I exited the position here and did not wait for the stock to go all the way down, and what would have eventually stopped me out, my stop loss was 63.25. This went down to 63.13. So I eventually would have gotten stopped out of this trade. This saved me about 75 cents a share. That is literally the difference between me walking away with profit or me walking away red on the trade. Being able to recognize this signal, guys, is going to save you a ton of money. I teach this to all of the TTG members, and the sooner that you can recognize this signal, the sooner you can exit a failed breakout before everybody else realizes it's a failed breakout. And that's how you can get out of the trade quickly and save yourself a ton of money. Now, Sage did not completely break down the rest of the day. It basically just traded sideways, but this ended up being the high of the day. There was no continuation. There was no follow through to the breakout. You can see we just basically slowly pulled in the rest of the day. But being able to recognize that signal and exit the position here versus exiting the position here or here or here makes all the difference. Makes all the difference. Okay, I had 2,000 shares, Gregory. I had 2,000 shares. All right. So that's what this signal is all about, guys, is being able to recognize that the breakout has failed. And in doing so, you've got to be able to properly identify that support level. All right. Does anybody have any questions about this? Is it clear kind of about the support level? Is it clear about the volume? Is it clear kind of the signal that we're looking at? Do you guys have any questions? Guys, feel free, ask away. The floor is open. So I want to cover the lesson, and then I want to make sure that you all understand it and that there's nothing that you're unsure about. Yep, Gregory, my pleasure. My pleasure. No, nobody has any questions? Everybody gets it? That's awesome. So no questions. Okay. This is the first time that I've ever done a live stream and not had questions. Yes, I trade off the 3-minute. I also use the 5 and 15-minute just to identify the overall trend and to identify specific chart patterns. It's a little easier to see chart patterns on a 5-minute, and it's easier to identify trend on a 15-minute. I do not use 1-minute candles. I do not use 1-minute candles. I think 1-minute candles are best used for scalpers, traders trying to get in and out within seconds to minutes. My trades usually last anywhere from several minutes to several hours. So I don't go off of, and I don't use 3-minute candles. No, Wolf Trading, I'm not. So like that's what I'm saying. Like I don't trade off the 1 minute. You'll be able to recognize that pullback, okay, in a 1 minute, a 2 minute, a 3 minute, because it's just the price action. All right, it's just the price action. So it's a print of the new high, and then it's got to be quick too. It's got to be you print the new high, and within minutes we're back to that same support level. So when you see that, you can exit the trade before your stop loss triggers, and it can save you a lot of money. Because that first candle, you don't. So good question, Neil. So guys, Neil asks, why did I not exit on this candle? Why did I wait to exit on this candle? And the answer is that this first candle is not a false breakout. Okay, that first candle is not telling me that we have a false breakout. We've got the trade line that was working its way up. We could have very easily held support right there. We could have easily held support right there, which is what? The previous highs. If this stock held right there, and all of a sudden you saw Sage do this, okay, this would be a good sign, and then you can look for the stock to continue. So that's why you don't want to be premature and jump out of the stock as soon as you don't get continuation, because the key here is you need the stock to pull back into that support level. So here was that support level, right? There's that support level. So when we put in this candle, that's when I'm like, okay, this is a false breakout. It's time to exit this position, and that's when I was able to get out. Getting out of the trade right here is a little premature, and you'll find yourself sometimes exiting the trade, and then it continues higher and then it continues higher without you. So that's why I didn't exit on that candle. But really great question, Neil. Yep, exactly. Contrary to KOD, in which you entered in the red candle, why you did not do the same thing and waited for the second green candle? It's not that I was necessarily waiting for the second green candle, Rodrigo. You're talking about on my entry. It's not that I was necessarily waiting for the second green candle. I wanted to get long lower. I wanted to get long here. I was actually bidding down here in front of this level. I was trying to get long in this region, Rodrigo, but it just wasn't pulling in. So when this candle went all the way up to the high, this candle right here, I said to myself, oh no, this thing might go. It might go right now. And I just moved my order up because I wasn't getting filled down here. So I moved it up, and then I was able to fill inside that candle. Anytime, Neil. It's my pleasure. Costin 1050 says, hey, Mike, if your stop price is hit, but before you hit the execute button, the stock bounces back above, but the volume is not increasing, should you exit or continue to hold to see if volume comes in? Excellent question, Costin. So I don't use physical stop losses. I use mental stop losses. And when a stock gets down to my stop loss area, so let's say my stop loss is 63.25, we get down to 63.25, I'm really seeing how is the stock reacting. Do we come down to 625 and then 63.25 and immediately pop back to 664? If we do, I might hold back a little bit. I might give the stock a little bit more time. But if we come down to 63.25 and then we're just sitting at 63.25, we're not bouncing, or maybe we go through 63.25 and now we're trading 63.20, 63.19. At that point, I'm saying, okay, there is no support at my stop loss area. The whole point of the stop loss is your stop loss should be set just below the support level. So sometimes when a stock comes down to that support level, you don't want to necessarily exit right away in the support. Sometimes I'll wait to see, does the stock bounce off of that support level quickly? If it does, I'll hang out a little bit longer, and then that tail on the bounce back becomes almost like a physical stop loss. Okay, so that's kind of what I do. That's kind of what I do with my stops. What do you describe as a good technical catalyst? Oh man, Alexander, that's a loaded question, man. That's a loaded question. I mean, there's a lot of really good technical catalysts. I mean, the one thing that I will say, I mean, it's a very broad question. I mean, I'm going to give you a broad answer, but because I mean, otherwise we can spend 10 hours going over good technical catalysts and good technical setups. But I don't ever place a trade because of one technical indicator. I will never place a trade just because a Fibonacci level is there, or just because the stock's at VWAP, or just because something else. I look for multiple technical indicators to all be giving me the same signal. I like when there's multiple indicators that are lining up in the same area. The chances of you having support in that area, if there's 3 or 4 technical indicators at that same level, is higher than if there's just one indicator at that level. So I think it's best, and I teach all of our TTG traders to how to use technical indicators together and how different technical indicators work in conjunction with one another. Because it's important to understand technical indicators separately, but in order to really master technical analysis, you have to understand how those indicators work together to be able to identify A-plus setups. How do you get over the emotional aspect of sizing up each trade? Anthony, I mean, you've got to get over the fact of sizing up. I mean, you have to size up when you're ready. That's first and foremost. You've got to, when it's time to increase your position size, this is a little tip and a little piece of advice I'll give you regarding position size. Show yourself real consistent profitability with your current position size, like several months of consistent profitability with your current size before you increase your position. And what I would say to you is make sure you increase your position size incrementally. Let's say your position size, let's say your average position size is $5,000. Don't just increase your position size to $10,000. Maybe go from 5,000 to 6,500. Okay, like incrementally increase your position size. And when the time comes that you increase your position size, if you feel your heart pounding out of your chest, you're sweating, your leg is shaking, you're very anxious and nervous, that means you're not ready to increase your position size. You should not have this overwhelming sense of anxiety and nervousness the first time you increase your position size. That means you're not ready yet. So if you ever find yourself in a situation where you think you're ready to increase your size and you go after it and you increase your position size, then all of a sudden you have this feeling that I'm talking about, like your heart's coming out of your chest, I suggest immediately getting rid of the extra size and get back down to your normal size you're comfortable with and make your way through your trade. All right? All right, guys. That's it. That concludes our lesson. Is anybody real quick before I go, does anybody have any questions about this specific bearish signal? You guys understand the signal. You guys know what to look for now. You're confident you can identify this false breakout if you see it on Monday? All right. Jaron, yeah. I mean, I'm always looking at what stocks are gapping up and gapping down. You know, what stocks have news. Those are always going to be the stocks that are on my watch list. But what I also do is if I put a stock on my watch list today, and you know it doesn't necessarily trigger today, but the chart pattern is still intact, I'll keep it on my watch list for 2 or 3 days. Sometimes your timing is just off. Like maybe you have a really good trade idea, and I always tell all of our TTG members that you want to, like, don't give up on good trade ideas. Don't give up on good trade ideas because sometimes maybe your timing is just off. So if you guys are looking for if you have an idea for a stock that is on your watch list, don't just give up on it if the stock does not trigger that day. Now listen, if the pattern completely falls apart, then yeah, get rid of it. But if the pattern is intact and it just hasn't triggered, keep an eye on it. So like, I'll give you an example. KOD is still on my watch list. It was on my watch list today. It did not trigger. It's still on my watch list for Monday. Peloton, PTON, is on my watch list for a swing trade. I did not enter the position today, but it's on my watch list for a potential swing trade. So I have KOD on watch for a possible squeeze move on Monday, Tuesday, and I've got Peloton on watch for a possible maybe more, maybe a 2-week swing trade. I think Peloton has a chance to see a new all-time high. I think Peloton has a chance to get into the 40s as we get closer to Christmas. Wolf trading, great question, man. I can tell you're definitely not a newbie. I can tell your questions are really good. So let me answer Wolf Trading's question real quick. When formulating the false breakout decision and cutting it loose, are you giving more respect to the volume leading up to the breakout versus current volume or the tape at the high of the day? I'm giving a lot more emphasis, Wolf, on the break. Okay, yes, Alexander, I do trade IPOs. I'm giving a lot more emphasis on the break. The volume leading up to the breakout should be lower. You should have a slowdown in volume during a consolidation. So the volume leading up to the breakout should always be lower than the volume of the breakout itself. Okay, the whole point of the breakout is that the stock just got through a resistance level. What's a resistance level? An area with a lot of supply. So you're going to need an increase in volume to clear that supply out. So you're always going to have lower volume in the consolidation and heavier volume on the breakout. Oh, Mirai, you're still in Sava? Mirai, I would. I mean, Sava really looked terrible today. I mean, I'm not trying to throw salt on the wound, but I don't really, I would exit Sava as soon as you can. I mean, I think the only thing that saves Sava at this point is a press release, but you can't base your holding on to your position on a press release. Well, I'm ready to turn up tonight. It's my father's birthday. Well, his birthday was yesterday, but we're doing a dinner for my father's birthday. So that's why I'm that's why I don't have a hat on today, and that's why I'm not in a hoodie. All right. Ravi, we just covered. Ravi, you're coming. I guess you just came in here late, Ravi. We just covered how to identify the false breakouts. As soon as this live stream is over, it will be loaded on the YouTube channel. It will be loaded as a video. So, Ravi, just go back and watch this live stream from the beginning, and I go over exactly in detail how to identify those false breakouts. Kent, all right. So last question, guys. Last question, and then I really got to go. Kent Block says, "What are your thoughts on lower volume but great chart setups like LXRX today? Took a while, but a great outcome." There is a lot of stocks that are good chart setups but have low volume. Volume, in my opinion, guys, is relative because there's a lot of stocks that have low volume that are too low volume for me to trade. But it doesn't mean that somebody else can't trade them as long as the chart setup is there and you're getting the right volume profile at the right places during the day. So let's say you're getting a stock that has low volume, it's consolidating, it breaks through the high of the day, you get a strong increase in volume, it pulls back in, that previous high of the day is holding, the chart setup looks great, but volume overall is light. Overall, it's a low volume stock, but as long as you're getting the right profile, the right volume profile that coincides with that price action, it's okay to trade it as long as there's enough volume for you to get in and out of your position easily without a lot of slippage. So I'm not going to trade a stock if, let's say, I want to buy 10,000 shares of a stock, but let's say in a 3-minute candle, the stock's only trading 15,000 shares or 8,000 shares in a 3-minute candle. I can't buy that stock. I'm going to stay away from it because I can't get into my size without slippage. And if something goes wrong, I'm scared I'll have a problem getting out of my position. So I'll stay away from it. But if you're looking to trade the same stock and you're going to buy 500 shares, well, that's a stock that you can get yourself into as long as the chart setup is there, it's warranted, and the volume coincides with that right price action. Okay? Oh, no, I'm not bald. I got a full head of hair, guys. I got a full, thick head of hair. I'm not bald. I like wearing hats. I don't like doing my hair. But that's it, guys. That concludes our lesson. If you guys joined us late, make sure you go back, watch this stream from the beginning. I talk about a key lesson on how to identify false breakouts before it's too late. Guarantee you guys, the faster you identify this signal, this will save you a ton of money. You'll be able to exit these trades well before the rest of the street realizes it's a failed breakout, and you'll look like a genius. All right. Take care, everybody. Oh, guys, wait. Before we go. Time out. Wait, before we go. I told you guys all, I have a free webinar that's running. All right. There's a free webinar that's running. 5 lessons, okay, that I think are guaranteed to help make you a more profitable trader. I'm going to type that in chat for you all now. So, guys, here, use this link. All right. That link, okay, is how you can register for the free. It's totally free. It's about an hour. It's like an hour and 5 minutes long, and I cover 5 lessons, okay, that are guaranteed to make you a more profitable trader. So you guys, if you want to check out that webinar, you can just click on that link and register, and you guys will be able. The webinar plays at different times and different dates, so you can select a date and time that works for you and your schedule. It's not a live webinar at that moment because it was live, but now I replay it for people because if I do it live, a lot of people sometimes can't make it and they always want to be part of it. So that way I did it this way so you guys can log in at your own leisure and on your own time when it works for you, when the kids are sleeping or maybe you're done with work or whatever, so you guys can go in and check out that webinar. So if you guys want to check that out, just click on that link and it'll take you to the registration page and you can be part of the webinar. All right. Otherwise, take care, guys. I hope you all have a fantastic weekend, and I'll see you all in chat on